Hi guys. Today we will analyze JPMorgan Chase stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. Both the long and short-term trends are negative. It is better to avoid buying stocks with negative trends. JPM is currently trading in the lower part of its 52-week range, which is not a good signal. Support level is around $142. Resistance levels are around $155 and $160. Strong resistance level is around $172. JPM is currently showing a bear flag pattern. A bear flag pattern occurs when prices pull back slightly after a strong move down. It's not advised to buy the stock now. It is advised to wait to see how this turns out. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Valuing financial institutions. Understanding why financial institutions are different from traditional real sector companies is key. Banks function differently than traditional cash flow-driven companies. Traditional companies create products to make money. The products of banks are money. Banks are highly levered and they do not reinvest debt in the business and instead use it to create more money. They make money via interest. So, they view debt and interest differently. That's why our favorite discounted cash flow valuation method doesn't work for banks and insurance companies. Intrinsic values calculations. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. The excess return model. This approach is used for financial institutions where free cash flow is difficult to estimate. Then, we will use valuation based on earnings per share, EPS, 5-year average P/E ratio and expected growth rate. First model. Excess return model valuation. This spreadsheet contains some financial data that we will use for the stock valuation. In this valuation I will use margin of safety. 30%. Once we actually figure out what we think this stock is worth, we are only going to buy the stock if it gets 30% of what we think it's worth. It gives us a big margin of safety if our predictions are wrong. In other words, when something is worth $1, I want to pay only 70 cents for it. I want to be conservative with financial institutions. So, my margin of safety is 30%. According to our formula, the fair value of the stock is $269.95. When we apply the margin of safety to that value, the fair value of the stock would be $188.96. That's the price that I want to pay for this stock. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for JPMorgan Chase is 15.34. Minimum rate of return. I will use 12%. Because when we invest in individual companies, we are looking for a higher return than the S&P 500. For JPMorgan Chase, analysts forecast growth rate around 11.30% per year in next 5 years, and future P/E around 13. I will use 3 different scenarios for JPMorgan Chase Company: bad, average, and good. First scenario. JPMorgan Chase will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future P/E would be low, 10. In this case, the fair value of the stock today would be $79. Second scenario. JPMorgan Chase will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 6%. Future P/E would be average, 12. In this case, the fair value of the stock today would be $112. Third scenario. JPMorgan Chase will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 8%. Future P/E would be high, 14. In this case, the fair value of the stock today would be $155. As you can see, today the stock is fairly valued, $148, if we expect JPMorgan Chase's medium-high performance in future. Well, the stock is fairly priced. I will add it to my watch list. I would like to have this stock in my portfolio, because the current price is fair, but the stock is showing a bear flag pattern, so I will wait a few days, weeks to see how it goes. Maybe I will open a very small position in the next few days, and if the stock drops, I will just average down. Company's strengths. JPMorgan Chase is one of the world's largest diversified banking firms. The company operates a leading global corporate and investment bank and is the second largest mortgage originator in the United States, after Wells Fargo. JPMorgan Chase also operates a large retail banking network and is a leading credit card issuer. JPM has a return on equity of 16.4%. This is amongst the best returns in the industry. Profit margin of 40% is amongst the best returns of the industry. The company has been paying a good dividend for at least 10 years, so it has a reliable track record. Dividend yield is currently 2.69% annually. Risks. JPM is a major owner and trader of derivatives. Increased regulation of derivatives trading, including the movement of trades to exchanges and clearinghouses, could have an impact on JPM's trading revenues. Among economic risks are high inflation rates, the spread of variants like the recent Omicron strain, climate change, and supply constraints. JPMorgan Chase has a large consumer franchise in the U.S. and a large global securities and asset management operation. So, JPM may face risks from the U.S. and international government regulations. JPM is expected to show a small growth in revenue. In the coming 5 years, the revenue will grow by 4% yearly. Based on estimates for the next 5 years, JPM will show a small growth in earnings per share. The EPS will grow by 2% on average per year. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.